coming off of this week where we had blizzard conditions, we had tornado warnings, we had thunderstorm warnings, we had high wind warnings and red flag warnings and wildfires. I mean, it's all over the place weather. And so
Well, hi once again, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you back from Commodity Classic. And oh my gosh, what a time we had. It was rather unbelievable when you think about it. I mean, the crowd that we had in Denver, it was an all-time record. Last I heard, the attendance was 11,300 people, and the total was still climbing. So, wow, kudos to everybody that made it out to Denver to Commodity Classic. It was great to see everybody there and all the comments and all the feedback that we got about what we are doing here on the Comstock channel. So, thank you for all your support and great comments. We really, really do appreciate that. Today, here on a Wednesday, I'm going to be talking with Joe Camp of Comstock Investments. We'll analyze what happened in the markets on Wednesday. You know, Joe, while Commodity Classic was kicking off, everything just cratered on the grains. That wasn't necessarily the greatest setting to have to talk to farmers. But now that I'm back in the home studio here, things turned around and I see all green today and grain and livestock. What happened?
bit of a reprieve here after that last stretch. We've, for corn futures, had now just 10 sessions removed from the last poke at a new high. It was a 1-year high for May corn, and it was then after that 8 days straight leading up to today with a lower close, snapping that today with help from general stability in most markets. That includes the stock market, which is rallying further here as we speak. Still a bit to go there to finish trading for the session, but I link those two very closely. This is something we can draw back to about 8 or 9 sessions ago in the weakness for stocks that was related with the tariff threat and the general uneasiness about the economy as a whole. And if you look at, again, 10 sessions ago when corn topped out, that was exactly when, the S&P or the Dow Jones index also put in its last high. And since then, we've had this turmoil. And again, we bring up tariffs. We wonder if we've priced in the bulk of the bearishness. Of course, behind us now was that Tuesday implementation of new tariffs against Canada, Mexico, and China. We've had bits and pieces of responses, and including retaliatory tariffs from those affected countries, and there's going to be likely more on the way. For example, talk about the Mexican president announcing their response this next upcoming weekend. And then late in this session, something that helps sustain the grain gains and then also pushing still the stock market higher, it would seem, this news that broke about President Trump allowing U.S. automakers at least another month to be exempt from these tariffs, particularly bringing up the U.S.-Mexico-Canada trade agreement and therefore leaving some potential wiggle room where we could see exemptions and ultimately reductions to these tariffs. So it's been a wild ride since I talked to you last, and it's market turmoil for sure. Today, though, a better one all around.
Well, considering the rally that we've had since last fall in corn and soybeans and wheat, and how much we've given back right now, when you look at it from a technical aspect, is that enough? Or do you see maybe we need to fall a little more before you really find support again?
Well, unfortunately, there's not much under the market that could catch before you'd get to these key price lows from August 26th. The market turned higher, and there were different retracement levels we tried to draw out. You can bring up Fibonacci levels, and we fell below all of those pretty much in that 8-day slide. If that means for corn futures, we've given back more than 2/3 of that rally, which was more than $1 for May corn, August to now. For soybeans, we dropped a quick dollar, well over 2/3 of the move given back there. So it's really just about these last lows and whether or not they hold up. And for corn, That's just above $4. We're going to have to bring into play now that psychologically important even money market for soybeans. We've been testing the $10 mark, having probed below it, but finishing back above it for the May contract, as well as all those deferred months as well. And you get past $10 on the wrong side of it, at least you don't have much below that either before we'd possibly bring up even these much bigger 2019 lows, like for soybeans 780 even.
Well, of course, yesterday I had the honor to MC our Learning Center session there at Commodity Classic. So it featured our own president, Matthew Cruz, talking about South American production this year, and also our Ag Outlook Forum, acreage estimates, and he talked about that. Karen Braun was there. And one thing that I thought was very interesting in her presentation, and by the way, if you look at yesterday's podcast, you can watch and listen to the entire proceeding and all the details of what they talked about. But one highlight from Karen Braun's presentation was that she talked about the length of the funds. And when you have the large funds in there with positions of over 300,000 contracts like they do now, like for on corn, she said every single time that has ever happened 6 months later, they were still long. I thought that was interesting. And then we had, Eric Snodgrass talking on there about the ag weather outlook. He doesn't really buy into that 89-year drought cycle, But that being said, he said for other reasons, he's concerned about a very dry year. And he presented a lot of evidence. And again, I refer you back to yesterday's podcast. Check it out because you'll be amazed at what he said about the setup for this coming growing season. And with those being said, that seems like that would be well supported, especially in the corn market moving into the summer now.
That's what we're going to be tracking, this hedge fund position, and whether or not we've mostly over this stretch of downside seen liquidation of the longs stepping out of the market, which would fit with the general fear and the step aside, let the dust settle, wait and see type mentality, as opposed to necessarily a bunch of fresh shorts entering into the mix. And I think that can be the case. Largely, we'll watch volume, open interest, and then coming up into the next trader positions report on Friday afternoon, whether it was a massive liquidation event rather than a bunch of new bears coming into the mix. If it is just a reduction of longs, that can still leave the possibility that they're ready to buy the break and try to ride this back higher and to bring up the fund positions relative to the weather conversation. I think that's really important because that's one of the key components, the big input that could rile up those speculators leading into the spring season that we know to be traditionally friendly for grains as we get into the risk of the planting season and the unknown of the early season crop growing risk. I think there's a lot of uncertainty there that could keep them generally bullish or turn them bullish again. You mentioned the worry about drought, and that would come from, in part, the persistent of drought that we've had. I was recently looking at some rankings of where the country has been in terms of these last couple of months throughout the winter. You have areas like in central Illinois where we're a top 3 driest winter on record. And there's a lot of areas across the Midwest and throughout the Great Plains as well, where we're certainly in the bottom third of being the driest in a long time. And so that spells trouble. The other thing I'm going to point out weather-wise that I'm picking up more on, something I'll introduce to readers on the Comstock report at the end of the week here. When I write that, it'll be about this risk of this so-called sudden stratospheric warming, and that we're observing this warming of the stratosphere that's connected to the polar vortex. This can break down that polar vortex and again adjust the jet stream so as to allow some of that Arctic air to pull down into the U.S. and now threaten us with potentially late frost or freeze risks. And, we know that's going to be a threat not only over the next 30 days or so to the winter wheat crop developing, but eventually to the early season for row crop planting. So, whether it's, and this is, coming off of this week where we had blizzard conditions, we had tornado warnings, we had thunderstorm warnings, we had high wind warnings and red flag warnings and wildfires. I mean, it's all over the place weather. And so that's the big risk that we could see bringing these speculators back into the mix from the buy side.
Well, and again, I refer you back to yesterday's podcast during our panel discussion where I believe it was mentioned that overall, the entire plains from Texas to the Dakotas and from Colorado to Missouri, when you average it all out, I believe this is the driest winter on record, I think, for soil moisture. Very odd conditions. However, you go from the Ohio River where it meets the Mississippi. From there south, the river levels are like in flood state. You go above that juncture, like on the upper Mississippi and the Missouri River, and the levels are extremely low because it's so dry. Very weird. What about cattle? Before I run out of time here, the livestock markets were flying pretty high here on a Wednesday. How come?
This is a follow through on the reversal that we had from down to up sharply on Tuesday. I think following the tariffs, you can understand why we'd have an initial knee-jerk sell-off, whereas it's just get out, as mentioned, rush for the exit, don't be the last one out. Let's see what happens next on these tariffs. But then throughout the day, maybe an eventual realization that actually these tariff influences could be friendly insofar as further restricting supply side flows of cattle, particularly feeder cattle from Mexico and finished cattle from Canada. And we're already, we know, working on slim supplies in that market. And so you just the same on the demand side, have a flip higher and a turnaround for equities yesterday and the follow through up for the most part throughout today's session. And that's fuel for the demand side, maybe not being quite as we would have feared it just a couple of days ago. So that's, one example of what we could see go on with corn, where you take this correction, but then you have the speculators who are still awfully long the cattle, wanting to step right back in and defend their positions.
Those were some huge upward reversals in the trade. I don't know if you'd call it reversal or not, but definitely big moves to the upside, and that changes the pattern on the chart a little bit there. All right. Well, Joe, thank you for all the information today and explaining what was going on. It was a very busy day for farmers and producers. Fortunately, it was an update. We'll see if they get follow through tomorrow. Joe Camp is with Comstock Investments. Be sure and give him a call if you got more questions about these markets. And that'll do it for today's episode. Appreciate you joining us very much. For producer Brianne Jenkins, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.